Welcome to Real Estate Talk with your host, Ken Sachs. This show is created for you, the consumer. Our goal is to empower you with information and education, thereby giving you the tools needed to make informed decisions when it comes to real estate. Real Estate Talk is brought to you in part by the Spokane Association of Realtors. Here's your host, Ken.
Well, greetings, folks, and welcome to Real Estate Talk. I am your host, Ken Sachs, and it is my pleasure to be here. And I know I always say I'm excited, but I am really excited about today's topic. We're going to be discussing the biggest myths around VA financing. There's a lot of myths around VA financing, and so to get this out there excites me. Because there's a lot of veterans out there buying homes, wanting to buy homes. And so we need to know about this. And if you're a veteran, you for sure want to listen to this. And of course, as always, you can access this show anytime and listen to it again. So that being said, my guest today is Tony Byrne with Heritage Home Loans. Tony, welcome.
Thanks for having me.
Yeah. So Tony, let's start. Let's just do a brief intro on you and what are you about?
So I've been in lending for 6 years, so we're starting my 6th year in the next couple weeks here. And over the past couple years, I've developed a huge passion for this topic, making sure veterans are able to get in homes.
Sure.
It kind of started with my dad, who was a veteran, passing, and then as he at the end of his life, we were talking about why didn't you ever use your VA home loan, and he said, well, when I came back from kind of during the Vietnam era, I was treated so poorly that I was embarrassed to go to a bank and ask for it.
I didn't know that.
And so then as that happens, as
Yeah.
he passes, I'm going through a transaction with a veteran trying to use his VA benefits, and he can't get an offer accepted for a lot of the stuff we're going to talk about today. So it's during that time, it's like this keeps showing up, and we gotta change it.
Yeah, I did not know that backstory. So that's a big source of the passion. I told you
yeah,
about an hour
yeah.
ago. I'm like, you got a lot of passion, and you've just
Yeah.
kind of connected the dots for me there.
Yeah.
So that's pretty exciting. So VA financing. So I want to buy a house, and I want to use, if we're getting a loan, it can be conventional, it can be FHA, it can also be VA. So a lot of myths around it, Tony. So let's start talking about it. So myth number one around VA financing.
Well, the biggest myth I think out there is because it's a zero down loan that they're a bad buyer. They get compared to a lot of these down payment assistance loans that maybe the buyers, they legitimately don't have money. But VA, according to them, the stats in 2018 of the average buyer, their median FICO score, credit score is 712. Their median income is 87,180 compared to around 55,000 for the median civilian. Their average loan amount is 255,000, and even though they don't have to, 28% of them still use a down payment. And then with all that being said, a lot of the people say, well, they don't have any money because they're not putting anything down.
Right.
They have 17,000 in the bank on average.
Right, and I'm thinking of today's market similar to many markets around the country where we have a buyer's market. We have a market where the inventory is down. I'm sorry, a seller's market, and so here I am, a seller, considering if I want to enter into a contract with this buyer, knowing that if I enter into this contract, my house is now off the market, and I may have other buyers that want my house. And now I'm thinking, gosh, this person has no money. That's my perception,
Right.
Because on the financing addendum or the buyer broker, either way, says, well, it's 100% financing. Gosh, so they have no money. Probably a credit issue,
Right.
probably a qualification issue. So why am I going to enter into this contract and dance with them for 30, 45 days off the market, not being able to sell it, when I can just go with a conventional borrower? So that's a true myth and a true misperception. And your stats are wonderful because from what you just said, that sounds better than most buyers out there.
Yeah, that's absolutely a high-end conventional. Obviously there's conventional buyers that are higher, but that's a really good conventional buyer. That loan gets done.
That's huge.
With every lender every day.
Yeah. So myth number 1, 0 down does not equal bad buyer. 0 down does not equal bad buyer. Okay, that's a great myth. All right, let's bust another one.
Perfect. The other thing is, and you kind of mentioned the 30 to 45 days of closing.
Right.
So we get a lot, well, this is going to take too long to close and it's too hard to close. Absolutely not true. The average across the country, which there's some lenders that are slower, obviously some that are faster, but it's 26 days to close a loan. That's better than most contracts are written for. So, there is some, in Spokane, there is some timeline appraisal issues.
Sure.
They have, the day you order an appraisal, they have 14 business days to finish it, but typically they come back a little bit earlier than that. And so it's, the timeline is not an issue. It's never been an issue for me, and I don't see it being a huge issue for anyone else. If it's out in a rural property, it becomes the same as every other property. Appraisals show up on time.
Right, so that's good because that's a myth, and there's reasons that myths exist, and that's because that's what people think.
Right.
So coupled with 0 down, oh my gosh, you don't have any money, and oh my gosh, these are hard to close. So not only am I going to engage, I think, with a buyer who has no money and maybe subpar credit score, because that's my perception, that's the myth, I'm also going to enter into a contract with a buyer who, according to this myth, oh my gosh, their loan type, difficulties closing it. I mean, that's all I hear, difficulties closing it. It's going to take too long. And again, I'm in a market, I can't waste time because we have to move on to our next chapter, wherever it is we're moving. So you couple myth 1 and add myth 2, and if you think that's reality, the poor VA borrower doesn't have a chance.
Right.
And that's only 2 myths.
Right. Well, and you look at, in terms of even being a challenge to close, our operations manager and I joke all the time that, if you have a heartbeat and a certificate of eligibility, we can get you a loan.
Right.
Their guidelines are more lenient, and we want to close them. There's less overlays, which overlays are basically, if I were to go to one bank and they say you can't do this loan, and then they come to my office and we can do it, that's because that other lender has more overlays on their loans. And in terms of, like, conventional has the most overlays because it has the least amount of protection for the lender if in case of default. VA has the most amount of protection for a lender.
Okay.
So we want to do those because if something gets screwed up, we get our money back.
Right. Overlays. What's an overlay?
So it's basically a guideline above the standard guidelines,
Okay.
but it would be, again, if you go to one of the banks down the street, they say you can't do it, come to me and I say you can, then that other bank has an overlay that's preventing finance.
So like a roadblock.
Yeah.
So an overlay is a roadblock.
Yep.
So you're saying with VA financing, there are fewer
absolutely.
overlays, fewer roadblocks.
Yep.
So the myth and the perception is they're harder to close, but that sounds, based on what you're telling me, completely opposite of reality.
Right.
Which is true of most myths out there, regardless of the topic.
Right. Yeah.
So that's good stuff. Gosh. So myth number 1, no money. The buyer has no money. And myth number 2, I'm not going to be able to close it. They're too hard to close. They have a lot of overlays or roadblocks.
Right.
So far, man, we've shattered those 2 myths.
Absolutely.
Those are absolutely false. But wait, there's more.
Yeah.
So, okay, let's keep going with these myths.
So the third one comes around the appraisal, which is here we go, right? So earlier this year, I got this so much on I actually made a post on my Facebook page about it, and so much I guess vitriol and negativity on there that so as I made the post, it was just like, well, it's VA, so it's not there's no way it comes in, or whatever. And so I did a study on all the loans done at Heritage Home Loans, and it was a small sample size, but it was 1% more of VA loans came in low. And is that number greater? Yeah, but out of 100 loans, that's one more that's going to come in low. And the big difference between VA, and this needs to be stressed to sellers because I don't think they're told this, is once appraisal comes in low, you now have 2 options to get some or all of that value back, where if you do a conventional or an FHA appraisal, that appraisal is that appraisal. unless you can find legitimate mistakes. And so having the option of Tidewater, which has to be called on every loan when the appraiser doesn't think they can meet the value of the purchase and sale agreement, they have to initialize Tidewater with the lender, which basically allows the real estate agents to come in and say, these are the comps we used, and this is how we came up with the value. And so you can dispute with the appraiser that value.
Okay, so what I'm hearing is that about in your sampling, 1% came in low. 1% of all VA transactions, 1% or VA appraisals, 1% of them came in low. But I'm also hearing you say the 1% that came in low, that those are more easily challenged.
Absolutely. Yep.
Okay. Where you have an option. So you said Tidewater. Okay, so it came in low.
Yep.
What's Tidewater?
So before there's an actual value on the property, the appraiser will contact the lender and say, I can't do it. I can't get the value. These comps don't meet what the value
before they officially submit that appraiser.
So when that happens, the lender and the people involved in the transaction have 48 hours to come up with comps that are superior to the appraisers, that becomes the issue, right? My experience is most of the realtors come in with comps that are way too old,
right,
7 miles away, and say, well, this is how I came up with the value. It's the same house. And that doesn't work. That doesn't work on anything.
Right.
So 48 hours, and then the appraiser reevaluates, compares those two, and says, this is the value. And so we're still low, right? He comes in and he says, I still can't meet the value. Then the value is placed on it, right? So now we have this other option, which is called reconsideration of value. And here's the big thing is I've never lost this as a lender. I've never submitted this to the VA and not gotten all of the value back. Yeah, knock on wood for me, thanks. But only 0.4% of low appraisals across the country go this far. And why do they go this far or not go this far? Because it adds a couple weeks to the deal. So the problem is that extra 2 weeks, obviously the seller may have to get out of it and do those kind of things.
Right.
But what I'm seeing is people are saying, well, in that post where all the comments I've seen, the appraisal came in low and it's all the VA's fault. Well, did you go all the way through the process? Because they have this full process for you to try and get it back. This reconsideration of value, the appraiser is taken out of it. The VA wants veterans to be in homes. That's what they're for. So, like I said, you can come up. Almost every appraisal has a mistake on it, and it's our job as lenders, realtors, to find it. And we may not get all of the value back, but if up front, if the home was listed right, typically we'll get that value back. And there's a mistake in there. Or there's something that we can argue to get that value back in reconsideration of value.
Interesting. And we're getting ready to roll into our 1 minute break here, folks. So we may touch on this when we come back. But what I'm hearing is that the myth is that the appraisals come in low, but reality is it happens, but not that often.
Yeah.
And if it does, there are procedures in place that you can challenge that.
Right.
So that's good to know. I am getting the nod from our producer. So my guest, Tony Byrne here, and Tony is with Heritage Home Loans, and I want to give out his website, SpokaneMortgageGuy.com, and we'll give out his Facebook page when we come back, because Tony does a lot of videos and educational pieces on this. So when we come back, so you're listening to Real Estate Talk with Ken Sachs, and we'll be back in 1 minute.
Well, this is nice.
Yeah.
That's real Brazilian walnut.
Yeah.
We know.
To help you be safe, Washington state law requires you to call 811 2 full business days before you plan, for example, to dig, drill, plow, pull from, or pound anything into the ground. Be prepared to provide the operator with the correct address, cross street, and a description of your work. You must mark the dig area with white paint. The operator will inform you of the utilities notified of your impending excavation. Wait for all their marks. Be safe and dig with care.
Hello there, Internet. My name is Braden Magruder, and I'm just coming out of the Spokane Talks building, and I'm excited to bring to you guys a new announcement that I am going to be the new host of the Youth Spotlight program. Now, our old host, Colin, he's off to Texas Christian University to pursue a degree in theater and broadcasting, and you know what? That's great for him, but that's what I like to call adulting. And you know, I don't think that we have time for adulting with the Youth Spotlight program. What the Youth Spotlight program is here to do is to bring to you guys news, the greatest news of some of the most amazing people here throughout Spokane that are, just going in high school, maybe about to go into college, you know. These people are achieving life dreams and they are so young. And I think that these are stories that you guys should know about. And I'm so excited to be bringing them to you. Now, I'm a Spokane native myself. I've been performing throughout Spokane in various different shows. I just closed the show of Music Man, and you know, I guess I like long walks on the beach, keeping my business attire, while also keeping my French fry socks on close at hand. You know, it's going to be a great year, and I'm so excited to be your guys' host. So tune into Youth Spotlight to watch me interview some of the most amazing people. Thank you and have a great day.
Welcome back. Again, you are listening to Real Estate Talks, and I'm your host, Ken Sachs. And we have been talking here with our guest, Tony Byrne with Heritage Home Loans. And we've been myth busting, folks. We've been busting myths around VA financing, VA loans. You know, we hear sellers out there resisting engaging with a buyer who's getting a VA loan. We talked about myth number one. Well, there's no money down. So therefore, the buyer must not have any money, must be a poor borrower, must have a lousy, low credit score. The likelihood of that buyer performing, meaning closing, is low. I don't want to do that. Well, we shattered that one because Tony shared some data. And, you know, one thing I really appreciate, man, you have data to support claims. And Tony shared data that the average credit score, I think, was 717, and the income was close to 100,000, I think 85,000. These are very well qualified buyers. It's just the opportunity they have to choose this type of loan that doesn't require any money down. What would you do if you had that opportunity? So very key myth to bust. We talked about, well, gosh, I'm a seller. Boy, VA financing, these are really hard to close, and they take a long time. Well, we shattered that one as well, that doesn't hold any water. It's just all these misperceptions that not only impact the buyer, of course, but you too as a seller. You are eliminating options that are in front of you to sell your house. So we shattered that one, and we went into our break talking about appraisals. And oh my gosh, the appraisals, they're going to scrutinize the property more than a conventional borrower. The seller's going to have to make all these repairs. The likelihood of the appraisal coming in low is much greater with this loan type. And we pretty much shattered that myth. And I even learned some things too, which we were talking about during the break. And I told Tony, it's one of the cool things about doing this show is I learn every time I do one of these where it was in your data and with Heritage Home Loans, I think 1% you said had come in.
It's 2% of those appraisals, but 1% of every other loan type. So yeah,
okay.
So it's 1% more of VA appraisals, but again, 1 out of 100.
1% more. But not only that, there's a process in place to challenge that appraisal before that appraisal gets submitted. And it sounded like there's more processes in place. and the likelihood of successfully challenging it is greater
Right.
with a VA borrower than with other loan types. That's huge, folks. So that's why we're doing this show. Again, I'm not going to repeat all of the processes. That's what Tony's for. And again, Tony, his website is SpokaneMortgageGuy.com. And I mentioned earlier, and put it out now, we'll do it again at the end, your Facebook page. And what do you do on your Facebook page? Why would I want to go there?
So it's Tony Byrne Lending Team on Facebook, and I try to do videos every Friday with some sort of VA tip, and then Mondays I typically do just general home buying tips, which ties into that group as well. And then we do realtor interviews every Wednesday, just talking about the market or home buying, home selling type tips.
So just a lot of information, a lot of education. How do you spell your last name? That's probably important.
Yeah, it's Byrne.
Okay,
yeah.
Byrne. So good. Okay, so we've shattered 3 myths. Myth number 4 around VA financing. What is myth number 4?
So we get it a lot. Again, it comes back to kind of zero down is I'm going to have to pay for all of the buyer's costs as a seller. And in terms of that, so a lot of lenders, and it's kind of going away as the rates go up because everybody's shopping for rates. But there was a origination fee that we can charge. And if that's charged, that triggers, and we don't need to go into the list because it's boring. But that triggers a whole bunch of non-allowable fees for the veteran.
Non-allowables.
And so with that being said, then if that goes in, then the veteran can now not pay for a certain number of fees. It doesn't ever say the seller has to pay them. It just always ends up that they're the last person in the train that can say, I don't want to pay it.
Right.
But if there is not that origination, that 1% origination fee, it ends up being the only thing they really ever pay for is the full escrow fee, which is typically between $500 and $700, let's say. And in my 5 years or 6 years of doing this, I've never had a transaction fall apart over $600.
I would hope not. And we refer to them, folks, as non-allowables. And what that means is the borrower is not allowed to pay that.
Right.
So when you hear non-allowables, those are the portion of the fees, the closing fees, that the borrower is not allowed to pay. And so, of course, the myth festers and grows from that because then the sellers say, well, I'm not going to pay for the borrower to get a home, and those non-allowables, they could be $2,000, $3,000, $4,000. I'm not going to do that.
Right.
Well, that's a myth. So the non-allowables, as Tony said, and in my experience working with VA borrowers, $500 or $600, and that can oftentimes, we've made that up where if we can get it appraised, we'll just add that to the price. Yeah. So if the house is, let's say, $300,000, and I don't want to pay $500 in non-allowables, seller says that, well then how about if we make the price $300,500? And so then as a seller, we're protecting your net proceeds because we've added $500, the amount of the non-allowables, to your sales price, and then that money goes towards closing, but you're left with your original sales price of $300,000. That's how we protect your net proceeds. So a lot of moving pieces. Yeah. But I hope you're understanding that it's vital to work with somebody who understands these moving pieces, because imagine you're working with somebody who just perpetuates these myths. Look at the opportunity you've lost because you're not really clear, nor is the person you're working with, of really what the reality is. Is that fair?
Yeah, absolutely.
Good. So that was myth number 4, that sellers have to pay all these closing costs and there's so much money. Okay, so we've eliminated that. That one's gone. I don't want to hear you say it again. Okay, number 5. I feel like David Letterman. We need a drum roll. Number 5, biggest myth around VA financing.
And this is more geared towards the actual buyer, and that's that you can't use it more than once or can't have more than one VA loan at a time. And that's it's not a one-time deal. It's if you have a property and sell it, your benefits are restored. You also, if you, let's say you are stationed at Fairchild and get moved, you can own that home and go and buy another one using what's called bonus entitlement.
Oh.
And there's a huge formula that goes into that, and it may require a little bit of a down payment, but that down payment's not going to require as much mortgage insurance and so on and so forth. So you can still use that.
So this is more geared towards maybe the borrower who is resistant to take advantage of this program, because the borrower may be thinking that this is a one-time shot and gosh, I'm being transferred, or I know the likelihood of me being transferred is greater. And Tony mentioned Fairchild. That's our local Air Force base here. And so if I use it now, I'll never, ever, ever be able to use it again.
Right.
And that's simply not the case. So that's a good myth for the borrowers out there who are entitled to the benefits of a VA loan, but are resistant to take advantage of that.
Right.
So, yeah, that's good. So let's see. We have about 35 seconds left. So we have busted the 5 biggest myths around VA financing. Tony Byrne, Heritage Home Loans. SpokaneMortgageGuy.com is Tony's website. And Tony, again, your Facebook page?
Tony Byrne Lending Team.
Tony Byrne Lending Team. Byrne spelled B-R-Y-N-E.
B-Y-R-N-E. You
Sorry.
almost got it. You almost got it. Everybody does that.
Spell it one more time.
B-Y-R-N-E.
Okay. So, folks, a lot of information to understand. But come on, we need to educate everybody and pass it forward. Tony, any parting words?
Well, I think the biggest thing we can do in our professions is just simply ask, are they a veteran? And not count on people like me to do it. And I can't count on you to do it.
Right.
Just ask them, hey, did you serve in the military? You or your spouse. Don't make the mistake of not asking the spouse if the spouse did. But just ask that. And then send them to someone that can advocate for them to use those benefits.
Awesome. Tony, thank you for being here
thanks
today.
for having me.
Folks, thank you for listening and viewing. We'll see you next time. And you've been listening to Real Estate Talk with Ken Sachs.
Real Estate Talk is produced in Spokane, Washington by SpokaneTalksOnline.com, which is solely responsible for its content. Ask Ken a question, recommend a guest, and watch this program again online anytime at SpokaneTalksOnline.com. Real Estate Talk is brought to you by our friends at Spokane Association of Realtors. We wish you a great day.